Welcome to the Market Wrap, Tuesday, 26th of May. Jack, the US-Iran peace talks seem to be progressing quite strongly. How's the markets reacted to those?
Yeah, obviously there was a lot of news over the weekend about the progression of these talks, further supported yesterday. Trump saying they're going along nicely, and markets sort of reacted accordingly. Oil's come right off, and equities across the board have received a boost, and that's flowed through to risk-on currencies as well, such as the Aussie, and then naturally we see the flows away from the safe haven currencies like the US dollar and the Swiss franc.
And we've talked a lot about the actual price of oil over the past couple of months. One thing we haven't really touched on is that the actual oil reserves themselves across the globe are getting to sort of critical levels. So even if these peace talks are very successful, probably not going to expect the prices to go back to sort of pre-conflict levels.
Yeah, spot on. So pre-conflict, the price of oil is around 60 to 65 US dollars a barrel. Obviously, the height of the conflict, it got up to 120. It's now sitting sort of in the mid-90s. If the peace talks do progress and there's a deal put in place, the price of oil will obviously come off, but it's not going to go back to the pre-conflict levels. It will probably hover between $80 to $90, and that's because the impact of this, the supply chain issues are going to be existing for months ahead. They're not going to resolve overnight because the existing inventories are sort of nearing critical levels. So until those are restored through the re-engagement of the supply, the price is still going to stay elevated.
And today, so Memorial Day holiday yesterday, US markets expected to bounce back when they open.
Yeah, so in the Northern Hemisphere, there was a lot of bank holidays. The US, England, Germany, France, Switzerland all had bank holidays, so there would have been less liquidity in the market. So as traders get back on desk today, expect there to be a bit more movement in the markets.
Excuse me. And higher than expected consumer confidence results coming out of the US. What are we expecting to see on the back of that?
Yeah, it's more if they actually guard the survey results until they're actually posted. But if consumer confidence does come out positive in the US, it's going to have a positive effect on the US dollar, and that's just the relationship between consumer spending, inflation and interest rates. So if consumers are confident, that means they're more willing to spend their money, invest it into the economy. That means businesses will thrive, they'll increase demand, they can push up their prices. Obviously that creates inflationary pressures, which will mean interest rates will either hold at where they are or potentially move up. So it's just that relationship, they're all intertwined. So when you boil it down, increased consumer confidence will boost whatever local currency it involves with.
And the top three big moves overnight, starting with gold, so almost a 1% boost. Again, we've talked about gold being a little bit unpredictable at the moment, but is this kind of expected after some of the talks on the weekend?
Yeah, so this is probably the two key drivers. Traders buying it low, so it was getting below that 4,500 level, a good time to buy. And then also the US dollar weakness, increasing risk sentiment drives down the US dollar. Obviously the gold's crossed with that, so that's got to get boost out of that as well.
And the JER 40 one we don't talk about too often, but 2.5% increase as well.
Yeah, big increase. Germany is one of Europe's largest economies, and obviously in close proximity with the Middle East. So yeah, positive talks out of there, boosted up a lot of the industrial stocks and companies. They also have had recent pretty decent data indicating their economy is sort of consolidating and growing a bit, which wasn't as expected. And again, it's pushed up. They've got a couple of big banks like Deutsche Bank, which had a really great day yesterday. So yeah, the index as a whole is on the improve.
And oil, which again we've talked about a lot, down on the back of those announcements, but probably not expecting it to continue back to the pre-conflict levels.
Yep.
And some big moves in volatility. The Euro Swiss, couple of really large movements back and down.
Yeah, again, this is just the divergence between the risk-on asset and risk-off asset. The euro is a risk-on. Rising risk sentiment will encourage inflows in that. And then the Swiss is a traditional safe haven asset. So whenever we're seeing positive talks out of the Middle East, expect the euro to rise and the Swiss to fall off.
And the S&P, again, no sort of surprises there with an increase, but interesting to see what will happen today.
Yep.
After the holiday, obviously. And the chart of the day, Ethereum. What's going on with Ethereum here?
Yeah, so this is looking at the daily price of Ethereum in 2026. We got two pink lines there, one forming along an identified upper boundary and one along the lower boundary. And what some technical traders might be looking at is the potential formation of a bearish pennant. This is identified from a steep drop, which we saw towards the end of January, start of February. And then there's a period of consolidation where it sort of forms a diminishing positive wedge. And if the pennant formation does hold, once the wedge converges, as it seems to be doing at the moment, it's sort of consolidating along that lower boundary. Traders expect another steep drop-off, which could take the price down to $800 to $900. Again, this is purely from a technical analysis standpoint. However, if the price does sort of rebound a bit and head towards that upper pink line, the upper boundary of about 24.50, that will sort of reverse any bearish sentiment and could push the price up. So sort of just one to watch over the coming days and weeks.
So do traders apply the same sort of technical analysis no matter what the symbol is they're trading?
Yep, exactly right. It's more looking at the price chart itself rather than any fundamental factors given the specific symbol.
Okay, thank you. And the article of the day, a bit more information on those oil reserves in Asia and Europe.
Yeah, this is a veteran analyst who sort of specialises in global energy commodities, and so this just explores the inventory crisis that's sort of starting to take hold and was only exacerbate if the conflict does drag on.
Okay.
Cool.
Thank you. Cheers.